Hey, what's going on, my friends? It's your man Adam A. Spencer here with another look at our growth portfolio where we contribute $25 every week. And yeah, as you can see with this article, 50 top growth stocks down big. And it's been a growth stock bloodbath. So our growth portfolio, to give you a heads up, is not looking pretty, but two or three of the companies that we have in our growth portfolio are mentioned in this article. And one of them is one of those big three that they want to give a little shout out to. So I thought I'd just put a little emphasis on that particular company and our portfolio in general, because I know a lot of you might be new to investing. Maybe you started, you see some of these companies in our portfolio and said, hey, let me run with that. And or maybe you're someone who's part of our dividend portfolio, and you decided to let me give the growth portfolio a shot, and now you might be feeling like maybe let me jump out. Hold on. If you are an income focused investor, you may get some satisfaction seeing the now dramatically deflated growth stock bubble. However, you may also be well served to take advantage of the significant opportunities it now presents. Yeah, like I mentioned, things aren't looking so hot for our growth portfolio, but this is kind of normal. Even with Kathy Wood's ARK ETF, you can see, I think it's ARKK. Yeah. Uh, in particular, I mean, that baby ran up and ran back down. It was a roller coaster, but it's still doing better than some of these other ETFs and whatnot. So, hey, when it's all said and done, we're doing fine, but it might continue to go down even lower potentially. So that's kind of why a lot of people are kind of freaking out. I think some people are getting scared. We're seeing a lot of weak hands, people selling, and most of those people are new investors. And that's why, again, I'm putting emphasis on this portfolio for you guys in this article, because we're seeing 50 of these top growth stocks that are down big. And a lot of these are companies that are pretty popular with us retail investors. But you're going to notice, if you look at this list, our baby Palantir is in the mix here. And Palantir is actually one of the big three that they mentioned in this article. And you'll also notice DraftKings, that is also in our portfolio, that is mentioned in this article. And, there are other hot plays in here that you should absolutely consider adding, that we might even consider adding to our portfolio. Someone like Neo, who I used to have money in, never really spoke about it on this channel, maybe my other channel. Yeah, I mean, there's other top dogs, Teladoc, which, hey, if you got, I gotta give you guys, I might have made a video talking about it, but Teladoc is a company that I owned when it was, I mean, what does this say? $80 right there. Yeah, that's high compared to where I owned Teladoc. Like, let's just say, yeah. So if we want to talk about building out a portfolio and holding for a few years, trust me, I know what it means to have weak hands and seeing volatility and just getting scared and jumping ship, and the importance of having strong hands and just holding true to what you believe, because I knew what Teladoc had the capability of doing, but I couldn't stay. I was too new to investing, and I couldn't stand the roller coaster of a ride that we will experience when you get involved with some of these new growth companies. If you're watching it on a day-to-day basis, even how we're doing it weekly, it can be brutal, and that's why I kind of suggest some of you guys not even watching this portfolio every week. When I do these videos, maybe don't come back every week. Maybe watch this video once a month. Maybe watch my other videos every week, but not these growth portfolio videos. So maybe you can, just because you want to get an update and you need that motivation to help you with understanding the importance of staying true to this investment and understanding it's going to come back up. But when it's all said and done, after this volatility here, in the long run, in 5 years from now, it's going to be much higher than where it currently is. And that's really what, you got to believe with all these companies, what we kind of see here with a company like Palantir, which is another top growth stock. This article, this company, Seeking Alpha, recently wrote about, but as they agree, it has sold off far too much. And this is a great time to potentially add it to your company, especially because Palantir, as we know, is a big data company that is known for its highly secretive work with the US government. Palantir also has a massive total addressable market opportunity, and its government, which is very hard to get, but great if you can get it like Palantir, is growing rapidly. However, more recently, the company's new government initiatives are growing even faster than its bread and butter government work. Yet the share price has slumped significantly. It's basically caught up in this growth stock sell off. So, hey, my friends, if you believe in any of these companies long term and if they are down the way Palantir is down, I mean, knowing where it has been just in the past year, to me, is exciting because this is nothing compared to where I believe it's going to be in 5 years from now, in 10 years from now. So I see these slumps like this and I'm like, what? This is a sale. And this is across the board with our growth portfolio. We are here inside of M1 Finance. And as you guys know, like I said, we contribute $25 to this portfolio every single week. It's the first week of 2022. And over the past day, we are down 0.24%. Over the past week, we're down 9.45%. The past month, we're down 25.66%. That's $233. Oof. Past quarter, we're down 27.8%, which is the same for the 1 year and all time. So, yeah, this is tough, my friends. This is brutal. This is hard. I get it. You're like, whoa. You always be saying, Ace, if I put my money in a savings account, then it's going to be losing its value because of deflation and this inflation and this, that, and the other. And well, yes, that is completely true. And part of the challenge with a growth stock investment is that it will be volatile and you might be tempted to jump ship. You might say, I don't believe in that company anymore. I don't think it's actually going to be in a better place in a year from now. I mean, look at how the stock is going. It's just going down. And, that's the way our portfolio is going right now, right? It's down pretty bad. $200 is, quite a few bucks. But like I said, if you look at even the past month, it was down 233, 25.66%. All time, 27.80%. Now, this is a portfolio that we started back on October 8th. A lot of this growth excitement here with our particular stock, with this portfolio, really, I think the initially the biggest burst that we got came from backed holdings down here. Backed and pretty much, I think Nvidia have kind of been on a run for us. I think DraftKings was doing well for a bit. ChargePoint, which is inside of our EV Pie, I think was doing solid, but Coinbase might have been doing good for a little bit too. But as you guys can see, I mean, everything is pretty much down. We have Nvidia at the top of our list, which is holding us up. This is the only thing still giving us hope, giving me, I shouldn't say only thing, but when you see a portfolio all red, it's hard to say, ooh, I really don't know if I want to keep putting money in this, right? But so seeing a little green in here is nice. Nvidia's up 22.35%. Then ChargePoint is down 11.31%. Coinbase is down 24.68%. Backed is down 28.6%. Palantir, that we just mentioned, is down 34.55%. DraftKings down 42.39%. And Fuel Cell Energy down 44.12%. Ooh, we are just getting hammered, getting spanked by these growth stocks in our portfolio, down a total today of $204.05. And yeah, not feeling good when you're like, wait, I invested how much in this portfolio? $925. And I have how much today? $720. What? Hey, my friends, as we just mentioned with that article, with the top 50 growth stocks, I shouldn't say most, I believe all of these stocks are just getting hammered and plummeted. And basically, we are going to eventually see a nice little burst, a nice little squeeze, I believe, with a lot of these stocks in here. Palantir, for example, how we just saw in that graph. And I don't like M1 Finance's charts too much because you can't do lines and stuff. I know with Webull we could. I can actually show you guys some charts and some lines and whatnot, and we can try to be more accurate about like particular squeezes that might come in the timing of when you might see some of these stocks just burst and bust up. But some of them, again, they know Palantir is a hot stock. Retail investors love it, so you kind of see it get attacked. I feel oftentimes by hedges and whatnot and shorts. And if you, like I said, are a believer in it long term, then you shouldn't be worried. You should feel good. And like right now, what does it say? You can see our average share price is $23.59, and the actual share price is $16.59. So again, it can be tough, but like this is nuts here. Even alone, you see in the past one day, ran up to 17, whatever, and then it's all the way down to 15s. It is definitely being played with in a way that it can be, something that you might say, I don't believe in this. I'm going to jump ship. And it looks like it's continuing to go, it broke its that kind of support zone that you might have said this low point might have been support, 18, high 18s, 1847. And it looks like it might continue to go a little lower. It could come down to this area, mid 14s, $14, or potentially they might get it back down to $10 range. Regardless, my friends, of what happens with this price, I don't really care right now. Let me be clear about that. Right now, I don't care because I care about what this 5-year plan is going to look like. I care about what the 10, 15, 20-year chart is going to look like. Right now, for 1 year, all this right here, we didn't even have this 1 year. But imagine if we bought this a year ago for how far down it is right now. We kind of got it good, right? We started this back in October. So, my friends, you can't really be freaking out. You got to understand there are some people out there who've been holding this way before us. Some people who bought it up here in the high, 30s, and they are still holding strong, which is why you also have to have them strong hands, have them diamond hands. Yes, we are going to be stubborn. That is what it's all about. Them diamond hands all day. And if anything, even if my hands are full, I got some diamonds, some gems in my hands right now. Even if I see some more diamonds on the ground, I'm going to try to grab one or two. Now, you got to be careful. You don't want to drop any of them. So maybe you get a bag or something, throw them in your bag. And yeah, the bag is going to look small. It's going to look a little skimpy right now. But in like 10 years from now, you really going to have the bag. I'm telling you, these opportunities that we have with some of these stocks, I mean, this is the time to buy. And the one of the beautiful things with our portfolio is the fact that we're contributing on a consistent basis a small amount that allows us to essentially average down anyway, even as these stocks kind of continue to get pushed down over time. We can just continue to buy a small amount every single week, and it's not really killing us as much as if we would have just bought it when it was at its all-time high. Now we're like, hey, it's cool. If it goes down, we continue to buy a little every week. As it goes down with it, we buy more. So we're never missing out of its lows or its highs because you don't know, hey, it might break out. And if you're like, well, it's not going to break out higher than where it is, and then it continues up. Sometimes, at some point, especially with growth stocks, it might never come back to where it currently is. And so the prices that we're seeing for some of these companies that we have in our portfolio, literally, this will be the last time it is this low. We just don't know. It might go a little lower first, and then that'll be the lowest it'll ever be. And hey, we will have at least the opportunity to potentially catch it at that point because we are averaging down. We are buying a small amount every single week. So, hey, things aren't looking so hot right now, but don't give up. Have them diamond hands, continue to hold, And if anything, continue to buy more every week like we're doing. And you can easily do that if you're using M1 Finance. I have a link down below for you guys that you can use to set up your account and start to contribute small amounts. And hey, when you do set up and start that account, they'll actually give you some free cash that you can throw into your portfolio, or you can, withdraw it, go spend it however you want. But you can just start to get the ball rolling now with your portfolio, in which, if you're seeing this now and you're seeing how low we are in some of these companies, well, if you buy them now, that means you're going to be above us. And anyone who's part of this portfolio with similar numbers, you're going to be doing better than all of us. So ultimately, don't, I don't want this to be something where people are just freaking out and just selling. Don't sell, my friends. Stay true to these investments if you believe in them. I've mentioned I've had some concerns with like fuel cell, for example, and I still do, but at the same time, I still think there's opportunity there. We're going to ride with it a bit. We're going to continue to invest, and hey, in a year from now, we can evaluate how we feel. In 2 years from now, we can evaluate how we feel. Prior to that, after that, at any point, we can always invest out, remove any of these companies, and add a new one. Maybe we can decide to add an ETF. And I keep saying it, I got to make some more content on ETFs because, my Roth IRA, for example, is full of ETFs. I don't have any single individual companies in my actual Roth IRA, to be transparent with you guys. But I do have, I think my largest portfolio actually might be individual companies, though. Yeah, it is larger than my Roth IRA, which is unfortunate. That shouldn't be the case. I wish my Roth IRA was my largest portfolio. And hey, that might be a reason why I might want to switch to another retirement portfolio that will allow me to contribute larger amounts than what a Roth IRA limits you. But video for another day. I'm going to wrap it up there. Feel free to comment down below with your thoughts if you guys have any of these companies in your portfolio. If you're feeling the pain, if you're like, nope, I don't care, I'm selling. Maybe you have some recommendations based on that top growth stock list that we saw at the beginning of the video. Who do we want to potentially add to this portfolio? At most, I just want to have 10 companies. Right now we have 7. So we do have some space for potentially up to 3 more slices that we can add. And again, they don't have to be individual companies. Maybe you have a great ETF. Well, if it's not in any of my other portfolios, I will absolutely consider adding it to this portfolio, or index funds, mutual funds, whatever, the whole shebang. Feel free to comment down below. But I'm going to wrap it up there. Much appreciation for watching. Feel free to like this video and also subscribe to the channel if you haven't yet. But hey, my friends, you already know I got to keep it moving. Tomorrow with our our dividend portfolio, things are looking pretty. So stay strong, my friends. Hopefully everyone's having a great weekend. Much appreciation for watching. But yeah, like I said, I gotta keep it moving, but I'll see you in the next video. Peace.